Hey guys, what is going on? Welcome back to my Robinhood portfolio. Today I'd like to talk about the only loss I've incurred so far on Robinhood with any day or swing trades. And that is with PHK here. I've alluded to this in a couple prior videos, but a few viewers wanted me to talk specifically about the time I did lose money through a day or swing trade. So I thought I would bring up PHK here. It's a closed-end fund. It's one of those funds that has a very high dividend yield. It's not currently showing, but it's in the 9 to 10 plus range for dividend yield, and at one point it was up in the 13 to 14 percentage points range with regards to dividends. It's monthly dividend stock, and you can see here over the last 1 year a lot of fluctuations in the stock price here. You can see at one point getting up to $9.10, $9.20 before plummeting all the way down to $8.20 before building the price back up again, $9.50 or so, then again plummeting in price to $8.58, and a lot of that has to do with the dividend payment. So with this big drop off here, and this is a very quick drop off, this is not over a number of weeks, this is literally a couple days here, 1 day to be precise here, falling almost $1, so you could lose quite a bit of money investing in these types of funds. I definitely would advise new investors to not jump into these funds. They're very enticing with very high dividend yields, 10+ percent dividend yields, but they're very, very risky entities. And I'll kind of go through PHK here to show you guys exactly why they are so risky. So would not encourage any new investors to get into these funds. They are okay vehicles for income, but again, for new investors, I think they're very, very risky. I would not advocate new investors jumping into these types of funds. Again, the high dividend yields can be very enticing, but if you don't really know the underlying financials of these particular companies, I would not jump in. Closed-end funds, business development companies, I would not play around with, because you can lose quite a bit of money investing in these. And this was one of the first stocks I bought on Robinhood because I thought that a great dividend yield would be very safe investment, but it turned out to be quite the opposite. These are very, very risky investments. So again, new investors, I would definitely stay away from these until you understand a little bit more about how they operate, how they work, their financials, and what some of the risks are with these. If we go to the bottom here again, it doesn't show the dividend yield. I think it's currently around 10, 11% or so. And you can see here my loss on the sale here. So October 10th, I bought 271 shares, $9.92. And then the price started tanking, so I got out of the stock, sold off those 271 shares at $8.90. So overall, lost a little bit of money on the trade. Again, the only trade I've really lost any money on Robinhood. I lost about $275 or so on that particular trade. And we'll kind of go through the reasons why that happened. Another stock that I currently have in the portfolio, but again, it's very, very risky. So far, it's been okay, but there is a planned dividend cut coming up, so the price of this stock could start tanking. It's already tanked a little bit here, or quite a bit actually, from $9.20 down to $7.93. Again, this is because there has been announced dividend cut that's going to be occurring in this particular stock, and I think there's about 2 more months where the dividend is going to be holding steady. They've already announced those dividends, but after that it could be another big price decline, because that's when the new stock, the new dividend will be announced. A little bit unclear where that's going to settle out at. As you can see here, it currently has a 12.78% dividend yield, but that could drop by quite a significant margin depending on how much they cut the particular dividend. But again, I anticipate another big drop here when that dividend drop does become set in stone, when it's announced by the company what it's going to be paying out. You can see here on the bottom, I've had this stock for quite some time. It's been performing quite well, actually. It's been doing a very nice dividend yield every month for me, again around the 12% mark or so. But again, these companies are very, very risky. New investors who don't know a lot about the stock market, who don't know a lot about the different types of companies, closed-end funds, business development companies. PSEC here is a business development company. They are very, very volatile companies. So I would probably stay clear of these until you learn a little bit more about the stock market, how it operates, and what are some of the risks involved in these sorts of investments. Let's go back to PHK here, because it has a very nice article detailing the risks involved in these particular stocks. You can see here 3 dangerous 9% plus payers you must avoid. If we take a look at the article, looks like it was a Forbes article here. a danger zone. And if we scroll down to the bottom here, I think it talks about 3 different stocks here. I think it talks about 1 closed-end fund and then 2 business development companies, of which PHK is one of those particular entities. You can see here the market hates PHK here, and you can see here 3 different lines here. In the orange line, you can see the net asset value. So a lot of these business development companies invest in an underlying portfolio of smaller companies. So that line is basically detailing what the net asset value is of the company. You can see there in the blue the price of the stock. You can see here was quite high, outpacing the price of the net asset value, then dropped down quite considerably with the drop in the dividend, which you can see on the bottom there, that red line. If we go all the way to the bottom here, you can see exactly what's taking place with regards to the price of the stock. So you can see the big financial crisis there, 2008 or so, and you can see that prior to that and then during that particular drop, the blue line, which represents the price of the stock of the business development company of PHK, was about similar to the net assets that the company had. So if you add up all of the investments of the company, it should equal about the share price or so. But you can see here since that time, the share price in blue has been way above the orange line there, which basically indicates that the stock is selling at a premium. So the NAV or net asset value is that orange line, and the price of the stock is the blue line. You can see the net asset value is way under the blue line. So worst case scenario, the price of that stock should fall basically all the way down to the net asset value. And you can see there it's very, very small. I can't get this any larger, unfortunately. That the blue line there, $8.91, and the net asset value is $6.83. So if you bought into this company right now, you could potentially be holding a stock that's going to be dropping to $6.80 cents. So you can see here, $8.92 is what the stock price is. But again, the net asset value is much, much lower than that. You can see here a couple different drops here. Again, surrounding anticipated dividend cuts here. This particular stock, not sure what is happening with the particular dividend. With PSEC, there's going to be, I think, 1 or 2 more dividend payments before that dividend is most likely going to be cut. So there's going to be a very sharp drop after that, I anticipate. And again, you can see that happened with this stock here. But again, throughout this entire graph here, this stock is trading well above its net asset value of $6.80. So if you bought this stock at $8.92, theoretically, it could drop all the way down to that net asset value, if not lower. This stock has been very popular for whatever reason in the investment world. A lot of investors have bought the stock. That's why it's such a premium. That's why it's historically been at a 30 to 40% premium. Again, 30 to 40% above what the actual company's assets are. So you can think of that as a premium. There are a few stocks that trade at a discount, but right now, this stock is a huge premium, a very, very high risk. You could jump in, you know, this price here could be right at this moment here. You know, in a few weeks to a month, this price could drop way down. And again, the sort of line of resistance would be right around that net asset value, $6.80 or so. So very, very risky payment. You can see that the article there. Definitely take a look at that article. Details very nicely what net asset values are, what premiums are, how dividend, and the other thing I didn't talk about as well is leverage. These funds are highly leveraged as well. Basically, the quick way of thinking about that is borrowing money to make money. So you can imagine in environments of increasing interest rates, if it becomes more expensive to borrow money, it's going to be very unlikely you're going to be making a very big profit off that money if you have to pay a lot of that back as you borrow the money. So the net assets of the company will also somewhat decrease if it cannot make up its dividend payments. So net income will decrease because the costs, especially of leveraged accounts, will decrease because not only of borrowing the money, but also the economic circumstances in which the company operates. Sometimes these companies pay over 100% of their dividend out. Basically, they don't make enough money to make their dividend, but they're basically giving back to the investor what the investor has already put into the company. So it starts returning assets to the investor, which over time is going to degrade the net asset value, which is already very low on this particular stock, $6.80. So, for example, let's say this stock paid out $1 per year in dividend, but if it only made net income 80 cents per share, it's going to be decreasing the net asset value by 20 cents per share just because it has to make up that dividend payment. And that's why dividend payments get cut here. The company can't make the net income to cover the dividend, and at some point they need to cut the dividend. And then when they do that, there's a very, very sharp price in the price of the stock. And again, this stock is trading well above its net asset value. PSEC is a little bit different. Sometimes these companies can also trade at a discount, which makes them very, very attractive because they have the very high dividend yields, and sometimes these stocks can produce very, very good returns and cover some of the economic downturns that prevent them from making net income that's covering their dividend. But for the most part, these are very, very risky companies. PSEC, I think, is still at a slight premium as well. Not sure I would buy into this stock, but again, if you're a little bit more risk tolerant, not too risk averse, you could get into some of these stocks. But again, new investors, I would definitely shy away from these very high dividend yielding companies, business development companies, stocks that pay 9, 10+%. Very, very risky stocks. I would stick to blue chip stocks. Definitely stay away from penny stocks, again, until you know how the market operates, what factors influence the price of a stock, how stable a dividend is, how that affects the price of a stock. Again, going back to PHK, did a big mistake when I first opened up the portfolio, put a lot of money into this particular stock. You can see on the bottom here, lost money on the stock. The only time I've ever lost money on a stock has been one of these business development companies with very high dividend yield. So just my cautionary tale here of my portfolio. Again, they're not terrible investment strategies, but you definitely have to have a very high risk tolerance with these companies because, as you saw with both PSEC, as I demonstrated earlier, and as well as PHK here, you can have these sudden drop-offs in price, which again, the stock has trended back up here, but very, very risky investments. You can see this very clearly is characterized over the last 5 years. This is basically inherent to the stock here. You can see at one point dropping from 931 all the way down to 642, really close to its net asset value. So right here is probably where it should be trading, right around $6.40, $6.80. That's its net asset value. But you can see here, large premium here. 1 point tailing up, dividend in jeopardy, pulls back, trails up again, dividend clearly in jeopardy now, and it's trailing back again. And this could happen again. It could almost pull back to $6.40 or very close to its net asset value. So yeah, just wanted to talk about these companies. Again, my only loss in the portfolio so far has been on this company here. I bought in again at $271, $9.92, and even if I would have held that long, I'm still down $1 here. So this is a stock that I would not hold long like I would with a Ford or a Portola. Very, very risky stock, but again, very high risk, high reward kind of investments. If you're risk tolerant, by all means jump into these stocks. But if you're a new investor who doesn't know a lot about the stock market, buying and selling stocks, I would tend to avoid these stocks for now. Learn a little bit about these stocks, how they operate, and then if reading and doing your due diligence with regards to research, you still think this is a good investment, then by all means jump in. But if you're a new investor, I would definitely avoid these kinds of stocks. So yeah, just wanted to quickly talk about this in my portfolio. Again, from a viewer asking what my loss has been in Robinhood so far. Let me know if you guys have invested in these types of companies, if you're going to be holding a PSEC or PHK here. At one point I thought about maybe getting into PSEC after the big price decline, but I've kind of decided against it at this time. I've read some articles going either way, but a little bit unclear where this price is going to kind of settle out as. So I'm going to kind of watch this stock here. But it might not be a bad investment. But again, new investor, read up about these stocks before investing in these types of companies. So kind of with that, I'll end the video. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. Again, if you guys have any good video ideas, let me know. If you haven't signed up for the Amazon gift card giveaway, sign up for that as well. There will be a link in the video description below. And yeah, kind of with that, I'll end the video, and we'll see you guys next time.